Though it seems like a cold shower in the face, there are reasons to be positive about the stock market in the coming days, weeks, and months. Throughout the first several weeks of February, the market has been rising, overcoming concerns about rate hikes, inflation, and Omicron. Early January, the price of Tesla stock was above $1,200 a share, almost exactly at its all-time high of $1,234.31.49. Wall Street, on the other hand, seems to think that the stock is worth 10 times more than those of conventional automakers, or nearly 100 times Tesla's earnings per share. However, based on one value methodology, it appears to be approximately accurate. Wall Street is growing increasingly positive about Tesla stock, but given the worry of rising interest rates, analysts' increased optimism hasn't been enough to drive up the price. Would the value of Tesla shares in the future match everyone's expectations? Keep watching to find out. Mark Delaney, an analyst at Goldman Sachs, raised his price objective for Tesla stock in January 2022 from $1,125 to $1,200 while keeping a buy rating. Tesla was listed by Delaney as a top choice for 2022. He considers Tesla's stock to be the best concept in the electric vehicle industry and puts it in the outperform category. Similar to Jonas, Delaney highlighted Tesla's leadership in electric cars and added that the company's sales may benefit from trends in the adoption of electric vehicles throughout the world. Elon Musk, the CEO of Tesla Incorporated, has informed staff members that should they do well, he concurs with the Cathie Wood-led ARK Innovation ETF, which values Tesla at $3,000 per share. Cathie Wood stated in a recent interview that she bases her Tesla investment at $3,000 per share. Our estimate for Tesla's success has gone up. She stated their market share is the primary cause of this. Rather than declining between the end of 2017 and the present, it has actually increased pretty significantly. Despite the impending onslaught of electric cars from Ford, General Motors, and Toyota, well-known investor Cathie Wood continues to be quite optimistic about Tesla, one of her long-term favorite businesses. Wood's asking price for Tesla, meanwhile, could seem exorbitant given that the stock is presently trading at $860 and would need to rise beyond $300 in order to meet that price target. As early as 2025, ARK Invest predicts that Tesla will deliver 5 to 10 million cars. It also states Tesla will offer a completely autonomous ride-hailing network known as Tesla Network that is going to bring in a lot of money with a high margin. Musk emphasized ARK's revised $3,000 price target in an email to Tesla staff that Electrek was able to get. He also stated that he agrees with ARK's analysis. If we execute really well, I agree with ARK Invest, Musk stated. Tesla would become the most valuable corporation in the world with a $3 share price, valuing the company at $3 trillion at over $730 billion. The manufacturer is currently the most valuable automobile corporation in the world. Musk has discussed the price of Tesla's stock frequently. Musk spoke to his Twitter followers on the eve of a new high for Tesla shares last year, saying Tesla's stock price is too high MO. Elon Musk and the board of Tesla were sued by an investor who claimed that the CEO's erratic tweets violated a settlement he had with the U.S. Securities and Exchange Commission. Tesla's market value dropped by more than $13 billion as a result of his remark. Less than 5 ARK investors holding in Tesla was sold in September as the company's shares increased in value. 8,100 shares overall, valued at approximately $5.76 million, were sold. Now, though, as the price of Tesla stocks keeps falling, Cathie Wood has begun buying them all at once. One of Wood's most closely watched innovation-focused ETFs is still Tesla, for instance, at 10.49% of the ETF's holdings. Tesla is the top holding in the company's flagship ARK Innovation ETF. Wood continued by saying that Tesla's strategy would only be validated by the new EVs from the more established automakers. Furthermore, Wood expressed optimism about the Chinese market's prospects for EVs. The market is starting to show signs of life for Tesla, breaking a 2-day losing run. As of February 14th, Tesla's stock was up 3.1 in reaction to an optimistic report from investment banking Piper Sandler. Piper Sandler decided to show Tesla some love on Valentine's Day. As reported by Street Insider, the investment advisor reiterated its buy recommendation on the stock and increased its price target to $1,350, suggesting that new investors may experience a gain of up to 55% on the electric vehicle manufacturer's shares this year. Piper says it expects Tesla to earn more cash moving forward, so it updated its valuation to account for new estimates, deliveries, capex, and margins. As a result, the company is now possibly worth more. Adam Jonas of Morgan Stanley stated that Tesla was leading the electric car market at the moment. He wrote, "Consider the EV race as a marathon at mile 21. Tesla is leading the race. Everyone else is still tying their shoes or is at mile 2. As the marathon goes on, Jonas said that Tesla's position will only get stronger because the company has just seen record deliveries of its vehicles. In addition to raising his price target for the automaker shares from $1,200 to $1,300, he also estimated that in 2022, there will be roughly 2 million deliveries, with hopes to expand that number by 50% this year. Tesla delivered 936,000 vehicles last year. Analysts' enthusiasm for Tesla shares has been based on the company's operational experience during the epidemic, when supply chain delays and chip shortages beset conventional automakers. To keep its manufacturing operating, Tesla rewrote its software and switched between vendors. It also constructed 2 new manufacturing sites in Austin and Berlin to enhance production. These establishments will strengthen Tesla's positions in Fremont, California, and Shanghai. When taken as a whole, the innovations result in higher operational margins and manufacturing scale for its cars. We anticipate that Tesla will eventually reinvest these increased gross margins, which are possible thanks to the launch of the Berlin and Austin plants into the growth of its product service network and price. The company's automobiles are already among the top sales in a number of nations, including Norway and the United Kingdom. But Tesla has a long way to go before accomplishing these enormous feats. There are many possible problems for the corporation that we may witness in the future, but we are confident that Elon Musk will be able to overcome them. It would be fascinating to observe how they resolve these issues. First off, even with hefty government incentives like tax cuts for alternative technologies, Tesla automobiles are still excessively expensive. The starting price of Tesla's Model S, which is $94,990 before any incentives or reductions, remains prohibitive for potential buyers. Even the new, less expensive Model 3 from Tesla costs $43,990 before taxes, incentives, and gas savings, a price that most drivers will never be able to afford. In addition to being pricey for buyers, the cars are expensive for Tesla to produce. According to Gordon Johnson, an analyst at Vertical Group, the business lost around $14,000 for every Model 3 vehicle it sold in 2018. While these numbers might rise as the business expands, Tesla running out of batteries is another possible problem. One of the initial issues, the shortage of batteries that Tesla executives needed to power their devices, was a problem. Tesla is hoping to resolve its battery dilemma with the completion of its much discussed Gigafactory, which is now under construction in Sparks, Nevada, with a projected footprint of more than 1.9 million square feet. The lithium-ion manufacturing facility is expected to contribute to the yearly production increase of more than 500,000 Tesla vehicles. It is unclear if the Gigafactory will be finished on schedule, because large-scale projects like these are frequently beset by administrative or legal challenges. The Gigafactory has received approval from the Nevada government and is predicted to generate an additional $100 billion in economic activity over the next several decades. Additionally, there's more competition for electric vehicles. In the upcoming years, Mercedes-Benz, Volkswagen, Subaru, Ford, and BMW are among the other corporations that intend to join the electric vehicle industry. This could lead to some competition for Tesla's market share. Few tech firms might potentially enter the conflict. Google has made bets on the auto sector, and Apple Incorporated thinks it can compete with Tesla in the transportation sector. It is true that companies with larger current customer bases worry Tesla.
Right.
Although Tesla still has a long way to go, it's fortunate that they are already much ahead of their rivals. Owning a Tesla stake right now means you're possibly sitting on a lot of money. What price do you think Tesla shares will eventually reach? Please leave a comment below.